Okay, so
Anyway,
let's
decent day
start.
today, kind of. Yeah.
Yeah, yeah, it was. Let's kind of go around the horn and go ahead and share with us
Yeah.
what's going on in Rondeville.
Oh, yesterday I stupid was down 500. And I finally just said, okay, walk away and be down 500. You have to be down 500. so,
Yeah.
so today, up from that 500 down, I'm up 150. So I gained 650 today.
Wow. Okay, let's
So
talk about that because that
yeah.
actually,
So I've heard people on videos say, I'm in a trade and why? Why am I in this trade? I shouldn't be in this trade. And then you get stuck and you can't get out. And I think that's the thing I'm trying to recollect in October because Friday had a good day. I was up a few hundred, and I
yeah.
thought, okay, you gotta get a grip, girl. It's kind of like you always say, slow down to speed up. It's like, okay, rethink all this,
Yeah.
instead of jumping in a trade,
Oh
really
man,
rethink why you're getting in. And that was yesterday. I was just like, what am I doing?
I really
So
like what you're saying because what you're zeroing in on for me personally is everything that I've shared and taught, but I've not done myself. And that's the punch in the face or the reality check over the past 90 days. I'm like, you know what? No, this is dumb
mhm.
to have a trading plan, know the trading plan, execute the trading plan,
And
and
then
then I
do
walk
something
away,
different.
and then I come back and I log back in,
Yeah.
and I'm dumb. And now I got a lot better to where I've only got one or two, valuation accounts where I'm being dumb in.
Yeah.
But even then I'm starting to realize I said that's even dumb because the true reality is when I'm just rewiring my brain to be like a bot. I'm like, if conditions are met, I'm going to pull the trigger.
Mhm.
I have a reason to enter and I have a plan to exit. And that's what you
Yeah.
kind of jumped out at me when you said, what is
Yeah.
your exit strategy? We need to
Yeah.
have an exit strategy.
Yeah.
At the same time, we have an enter strategy.
hmm
Okay. And yeah,
So I
there
was
are
watching
times.
some trades by Matt. I was watching him and him talking through his whole strategy and stuff too. And he's like, to try to, because my big thing is always the drawdown. The drawdown just nails me, right? It goes up, it goes down, and it's like, wow. And I'm just like all over going, how do I get off this Ferris wheel?
Uh-huh.
And so he's really, he can sit there for an hour without 2 hours without taking a trade. And I thought, I really, hey, there she is. She's laughing
Yeah.
at me again, darn it. And so, Friday was a test of my wills because I was up and 250. And I thought, no, you need to walk away. You need to walk away or you're going to give it all back.
Uh-huh.
And I finally just shut my computer off and walked away and was really happy at the time and thought, yay.
Uh-huh.
And then yesterday, I just kept going down, down, down. And I thought, no, you need to just accept it and walk away before you go down more. Just quit trying to
Right.
recover because it never works. And
Right.
so I did. And then today, all the conditions seemed to be met, and I just happened to be in the right place at the right time, and I brought it up from the $500 loss yesterday to plus 150. So I thought, I'm happy. And then I had to go do a job. So I'm yay. So,
Yes. Yeah. And that is
you
so
know,
key because that and like yesterday was kind of my day. It's like, okay, I've got a strategy that I'm working on. Um, back testing, I just keep going and adding more and more data to it. It was like it was a loss. It was 1 hour, and I'm like, that is so much. And I actually felt good. I'm like, I'm done. I'm like because I know that this wins so much more than it loses. I'm
yeah,
like, who cares if I'm
yeah,
down an R? Who
yeah,
cares? And then today get it back. You
yeah,
know, and yet it wasn't wasn't the same strategy because that particular the condition just never did meet to enter
Mm.
my ORB strategy. However, it definitely gave me the bias that I needed for the day, and then conditions were met for 10 EMA, and so I took it. But yeah, yesterday my wife come in and I spun my chair around. I'm talking to her because I see I'm about ready to get stopped out, and all of a sudden order filled. I'm like, okay, we just lost. I just,
Ah,
oh, sorry. I'm like, no. I was like, this one's actually fine. I'm like,
yeah.
we followed everything, but
How many
everything.
times don't you turn your head though? You turn your eyes away from it for a minute and it goes, "Whoa," you're
Yeah,
like,
yeah.
so if you don't, I just have to have a stop and a target every time. I have to.
And you should.
Yeah.
And I did yesterday, and I was like, because where I get stopped, I got stopped out at I mean, it was just a good snapback. And here's actually one of the things I'll share this afternoon, but as again, I'm tracking all the different data on it. I've got it broken out to where even days of the week. And it was
Oh,
just
really?
so fascinating to me yesterday afternoon when I got that part done. And when I look at Mondays from July, August, and September, Tuesdays, Mondays are the worst day for this strategy. But it's
Wait,
still 50,
really?
yeah, it's still 58%,
Hmm.
but that is hands down the worst day out of the
Huh.
five.
Wow.
And then in every one of the losers that I have, again, July, August, September, every one of them, because I added the 200 back on. Um, Man, I don't want to, I'm just going to repeat this here in a couple hours, so I apologize.
It's okay.
But when the 50 is above the 200 and the 10, I put the 10 back on, the 10's above. When all three of those are above each other, that though that is consistent every time it's a winning trade. What is consistent in every loser is I might have the 10 might still be above the 50, above the 200, but the candles are below the 10, which, duh, I mean, that makes sense because or
Yeah.
I shouldn't say below the 10, they're on the opposite side of the 10.
Mm.
If the 10's above the 50 and the candles are above the 10, hey, you're trending.
Hmm.
Well, all of a sudden, I'm looking at every single loser in 90 days you know, it really breaks below the 10 and the candles stay below the 10. It's like, whoa, there is something there to definitely prevent a loss. Or if you're still waiting for the conditions to meet to get in, it's like, hey, no, I've got a lower high on a double top, even though I'm above the 10. That was a very common condition. So,
Mm.
you know, being able to go in and really narrow it down to just 1 to 2 strategies. See, that
Hmm.
50RB becomes my baseline strategy because that's a strategy by itself, but it
Hmm.
now also defines that daily bias.
The 5 minute breakout and then the retest. Are you talking about that?
Well, just that, yeah, because once that
Yeah.
retest is done and it's going to
Hmm.
stay above the range
Hmm.
or retest is done, it stays below the range. What
Yeah.
that does is all of a sudden it defines, okay, we've got a bias for the day.
Hmm.
Okay,
Hmm.
so now I jump back over, if that trade does not fill or it's done or even in progress, then I jump back to a 3 minute time frame and I'll look at 10 EMA or something. But
Yeah.
it
What
defines
what
a
what time
bias.
frame do you play that on? Because I've been kind of back testing that same strategy, the five
Yeah, so
minute
far I've
ORB
only trading it on the 5.
on the five. You
Yeah,
haven't
and
gone
I
down to a
do
three.
want to look at the 3
Hmm.
and because the range is not defined by a 5 minute candle.
Right.
It's defined by that pre-market range, Globex range
Yeah.
essentially. That's what defines it. It's just
Yeah.
happen to be trading it on a 5. But
Hmm.
there should be no reason to trade it on any time frame, the 2 or the 3 or the 5.
Hmm.
Uh, but I really like the 2 minute candle with in the interaction with a 200 simple moving average. So that's another thing that I've documented on every trade is like, okay, when the US market opens, where is price relative to the 200? And if there's a gap, you know, that there's time when it trends and it's a beautiful, we get 2 hours really quick. That's a non-issue. So there's gaps when the candles do not interact with the 200, and that's fine. But if there's a little battle between bulls and bears up or below the 200 and it's not interacted with that 200, every single loser, there is a gap on that 200.
Huh.
So just things like that, it's just blowing my
Yeah.
mind away. But going back to kind of what our theme is going to be in this conversation is, yesterday it was a loser, but I was like, I don't care, because I'm going to turn around and win 2 Rs,
Mhm.
next day or Wednesday or Thursday.
Yeah.
It'll
Yeah.
be back, and then I had to take off and go to Fairbanks, and I'm like, this is so cool. I'm not sitting here in front of my computer all
Yeah.
morning long, and I was free,
Yeah.
emotionally, and just totally content.
I had two accounts that were really close to being funded. So that was at the end of the month. So it was really frustrating. Um, so I thought, okay, it's a new month. I've got to get my act together and just do those base hits, 150, 200, maybe even between 1 and 200, and just get there by the end of the month.
Yeah,
Try.
yeah,
So yeah.
yeah. And I hate to even say this, but I have been within $2 of funding an account and then turn around and blown it the same day.
Yeah. Oh,
Just
I did that
revenge
too.
trading.
I
Yeah.
know, I did that too. It was over, and before I knew it, it went south on me, and I'm like, I think I looked away and it went south on me before I could shut it down.
Oh,
And I
once I
thought,
was funded, and it was almost a 2R. It wasn't quite. And I
oh,
was not at my computer. I'm like, it's fine. I come back, and I ended up, yeah. So, and
yeah,
that is really the epitome of how it's going to just make things so much worse in the long run. I mean, those are just perfect examples. And what I mean by that is you're getting that revelation right now. And if you can get it now and not 6 months or a year from now, do it
yeah.
so much quicker than I did. And again, it's still a journey, because all it takes is one day to jack everything up.
I know.
It
But those
has to
long,
be.
how do you deal with these long wicks? Oh my gosh. I remember Anthony talking about that. And at the time I was like, oh yeah, long wicks. Okay. Like, I didn't
Yeah,
really have a full grasp of how they just slap you in the face.
yeah, and that's the beauty of risk, meaning these wicks can really just ruin the day. It's like you got a perfect setup, perfect trade, then all of a sudden, bam, it's just one
Yeah.
wick that
Yeah.
it just kind of wicks up through that upper range or whatever. But
Yeah.
that's what I'm learning is, like, because kind of where this strategy kind of come from, I cannot trade with them, and I do not like the way they execute it. I love
Really?
the concept, so I've had to like completely tailor it to myself.
Is
But I mean,
that
they
the
just got
5
20-point
ORB?
stops, and they're just continually getting wicked out. And
Mm.
and I
Yeah.
but their 2R is achieved so much faster.
Oh.
So that's where you've got to look, okay, you want what might be 1R for me is their 2R, they're done.
Hmm.
But I'm just like,
Mm.
it just makes no sense. And so they have larger size. I'm like, no. So I have the smaller size, and then I like to use the full range a lot of times when I can. Full
Hmm.
range. I've got 3 stop criteria. One is the full range itself. Two is, hey, that opening candle, that a lot of time that way I'm my stop is at the low of the day, or my stop is at the high of day.
Yeah.
And three, if it multiple 5-minute candles kind of come and go before I actually have the trade, well, what is the valid pivot point, relative to the US market? And it might be the range, so the range, the candle itself, the preceding large opposite colored candle,
Hmm.
in other words, if I'm going to go long, well, I want to be, you know, well, it might be a long candle, 2 candles before, but that's a valid pivot point,
Hmm.
you know. And really, those are the 3 different things. And so, I even track that. multi-criteria like in one column, and so then I can sort it and say, okay,
Mm-hmm.
which stops, is there an objective, consistent rule that I can do with stops? And I haven't quite figured that out yet. I just have to say, okay, based on a larger range, then it's the opening candle or the valid pivot point. If we're into the trade pretty quick, then a lot of times it might be that opening candle. If we're not in the trade for about 30 minutes, then it's going to be a valid pivot point.
Mm-hmm.
And if the range makes sense, then it's always going to be the range. But a large range sometimes is too large
Are
because
you
maybe
talking about the range of the candles
the
large?
range of the Globex, from that last hour or 2 hours, that
Mhm,
narrow range before the
mhm,
U.S. market opens up.
mhm.
It could be
Range.
$1,700 stop on if you
Yeah,
do
to where
that
you
full
have to
range.
go $500 to make 2 Rs, then
Mhm.
that makes no sense.
Yeah.
And so that's where it's like, okay, then I go down, okay, what is a valid pivot point? When I say valid pivot point, the reason I use that verbiage is because our stop losses are just as important, if not more important, than actually what the exact price we're getting into the trade. And
Mhm.
again, that's because of Elliott wave. That's because price goes up, it retests, it goes up, and we're looking at lower. We're looking at higher lows and higher highs when we're going long. And so a
Right.
valid pivot point is every time there's a higher low and a new
I've
high, a higher high created, well then that most recent lower low becomes a valid pivot point.
mhm.
You
I've
know,
never
so
really studied the Elliott wave, but is that the higher highs and lower lows?
it
Higher,
is
is that what
plus
that
some more, plus
plus
some
more
more. And
It's kind of the
didn't we
same
talk
as
about that
Fibonacci.
2 weeks ago?
Fibonacci?
Um,
Yeah.
Fibonacci is
135, 13,
yeah,
135.
it's like you can see your Elliott wave, at least the first 5 legs of an Elliott wave, many times adhere to and respect the Fibonacci.
Mhm. Mm.
Um, but Elliott wave itself, I'll go ahead and share my screen and let's just look at it. Keep that on there. Yeah,
No.
so today I was actually looking at Elliott wave quite a bit. But Elliott wave is as simple as you got 1, 2, 3, 4, 5.
Mhm.
Then you're kind of looking at like A, B, C, but it doesn't quite.
Mm.
But it comes back down to your 1, 2, your bottom.
Yeah.
It comes back and tests that second
Yeah,
dip
it does.
Yeah. Because then you kind
and
of, once you
stays
hit
there for a while.
your fifth leg, so and so you even got here in Trading View, you can even come in here and look at
Oh,
Elliott wave
oh.
impulses right here.
What
So you
does that do when you click on those?
well, instead of me drawing with that brush,
Oh, it puts it
click
on.
up here and it just kind of 1,
Puts the
2,
numbers on it.
3, 4, 5.
Mm.
And then if you go the other way,
Mhm.
um,
Yeah, but I start
The
like
getting
ABC.
nervous
your
after
correction
4.
wave, and this is where it kind of goes back into the letters. And so then once you hit your fifth leg, well, then you kind of got your correction
Ah,
generally, and you're kind of looking at going the other way. But
ah.
um, here we just literally go sideways for quite a while, and that's what's very powerful about the Elliott wave is once you hit this fifth leg, I mean, and all we're looking at right here, Rhonda and Susan, is I'm just looking for 3 distinct lows.
Mhm.
Once I
Mhm.
know that, I've hit a fifth leg of an Elliott wave. It's that easy, and
Right.
that's very macro perspectives from an Elliott wave. But all I'm looking is, hey, once I make 3 distinct lower lows, hey,
Run.
I'm either gonna have to stay in there all day and hope that it comes back down.
Right.
But if you've hit your target in there,
Mhm.
take your profits off the table. That is a good
Mm.
reason to get out of the trade.
Mhm.
Maybe you're just a couple points. You don't want to be a prick for a tick. You know, you heard Matt TBN, you know, he says that, and it's true. You know, today it was one of those because it was like bouncing here, and then 1 minute, everything was going sideways, and I'm like, I'm like, do I hold on to it? And I went ahead and held on, and then I did, and it was perfect. Or you can see where my arrow was. My arrow is right here where I got out, and then it did go sideways. It never did come back down to this price.
But if
But
you look back over time on that 4 hour and 1 hour,
yeah,
those that up and down, usually it will be in the same place as it's done before. You know what you called the fencing last week? You build a fence. Well, usually you can go back in time and it goes up and down, up and down, up and down. I call it consolidation, but it's when the market's trying to decide which direction it's going to go, highs,
yeah.
resistance and support. It's
You know,
amazing.
I have a stupid question. On the right side, all the dollar amounts are different colors. Mine is that way too, and it never was before. Is that all from old markings on the screen?
No, it's probably more of we go into settings.
Yeah.
Um, Price labels and lines right here, like no overlapping labels. So these I don't like these overlapping because then they can't see them. See how it kind of affects those on the right? See that?
Yeah.
So
Yeah.
this is just settings right in here. Plus button.
So you you uncheck.
Yeah, and so I'm trying to think, there's one specific currency and unit, always visible. No, that wasn't it. Visible on mouse over. But there's a setting on here to where these, I want prices shown, and then of course I don't like them overlapping.
Right.
And that's
I'm
orders
glad
that,
you said that because mine are always overlapped,
yeah,
especially
Really?
on
and you have to
the
like come over
big time.
here and then like zoom out real quick to get them all spread out to really see. Because where this is kind of valuable is like even with this like long tool, you know, um, so there's so many prices showing
I
right here.
know. You have
What
no
are
idea
all
where you're
those?
at.
Yeah, what are all those prices?
I know, and I was
Kind of
trying to
spread them
find,
out on the 4 hour. There's not so many. But you can see how this purple is this line here.
yeah,
Purple
is
is this line
that's
here.
just an old line, right?
Yeah, it's this is my 4 hour support and resistance. So this is my block, my road brick, you know, my block where, hey, if
The
I've got,
fence you called it. Yeah.
yeah, fence, I'm not used to using the word fence. That's the first I've heard that.
You
But
said it last week.
did I say fence? It's kind of like a
Hmm.
roadblock. Yeah, we're not gonna, unless we got at least a 1-to-1 risk to reward from entry into this brick wall, is kind of what I call it, brick wall.
Yeah, or brick wall. You said
Yeah,
fence it or
okay.
brick wall.
Yeah,
Yeah.
brick wall. But instead of drawing these, um, you know, these little squares here,
Uh-huh.
you know, because then they actually are worthless a few days later, even though the actual price itself may be valid from 3 months ago. So I'm like, you know what? I'm going to see if I can't change that up because I'm tired of having just a bunch of little boxes that mean nothing to me, because this particular price right here might actually be support and resistance, support or resistance from a month ago. So now I
Right.
can leave these on and lock them, and I just update every day, you know, my 4 hour support and resistance. So I
Yeah.
changed how I do my larger time frame analysis with these purple lines. And so when two purple lines, there should always be a pair of purple lines. Bless you.
Excuse me.
And basically all this is representing is that brick wall.
I see.
So when we go like to
Yeah.
a 5-minute time frame, then you can kind of
Yeah,
see
sometimes
how,
it just ends up being a lot, right? On there.
well, we think it might be a lot, but it's really not. You know, when you think about it on a 4 hour,
see,
when you're zoomed way in on a 4 hour, it does seem like a lot. But you know, like here, to get rid of a lot of this. So like this morning, this is it. This is an existing support and resistance that really comes over from over
Comes
here.
all the way back.
Yeah,
Yep.
Yeah, so
Goes
see,
kick.
this is the reason it's there, is this touch
Yeah.
point here, this touch point, this wick, you know, this price range through here. Even though yesterday we kind of went right through it, but it didn't hold. But that's kind of like case in point why if I would have just a little purple box, well,
yeah.
then I lose all sense of support and resistance, historical
Mhm.
support and resistance. You know,
Yeah,
so that's where I kind of went to these purple lines to give me that whole look left, look left, look left. Because this same box here, I might build it here. Well, I also would have it over here and over here. Well, now
right.
I want to kind of keep it on my charts and kind of indefinite.
Mm-hmm.
And so when price comes back up here to this box, well, when it comes back down, this is still just as valid as it is
Mhm.
today. It will be in
It-
2 weeks or a week
Yeah.
or in a few
It
days.
always does. And then
But
look
I
at
don't
the, it,
remember all the dollar amounts on the far right being colored. Every one of them. I don't remember that.
This does seem like a lot. I'm kind of scratching my head here a little bit of why we do have so many.
Yeah. I
Uh,
didn't think mine did before. And I'm like, when did that happen?
yeah, and I'm just,
What did
oh,
I do?
I know why I know why mine are, because I go back to, you see every one of these little boxes.
Do those?
I'm keeping all my historical data of
Yeah.
this particular 5-minute ORB on there. So like all
Mhm.
these green boxes, that's the actual entry price,
Oh.
because the
Oh.
price is also showing
Mm-hmm.
on these right here. So
Yeah, we can shut those off, right?
I believe you can. If we go
Yeah.
into, so I'm in a long position right here, line, stop, price labels right here. So if you was to uncheck price labels from your long or
Mm.
short tool,
Oh, okay.
you know, and then come down here and like save as default, or, you know, save as default right here, then going forward, you wouldn't have all these prices on here. But if you were to go back, myself included, if I was to go back now
Mhm.
and delete all my long and short tools, because I've just kind of locked them on there. Like here's yesterday's, here's last Friday's, here's the day before. So I never noticed until you really mentioned it, but you're right. That is an issue, because now I've got all these prices on here that really are worthless
I know
now,
it. I know.
because it
I was
goes
trying
clear
to
back
figure
to
out.
July. But price labels, when I leave these on there, then that actually is, that's the reason. So yeah.
Sometimes I'll go back on the day, like yesterday, and just when it's not live and active, and just kind of go through it and see where did I miss an entry that I could have taken,
Oh yeah.
you know, because sometimes it just moves so fast. And you're like, yeah, it's easy to watch people. This is where you enter. And
Mhm.
in the meantime, while you're saying that, while you're trying to enter, pew, 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 it's, I don't know, maybe it's just me.
No, it does. And that's where we really gotta kind of watch when things get around these brick walls too, you know, because a lot of times that's where you're gonna see a lot of volume.
Yep.
We come in here to where's it at? Like an anchored volume profile, we'll just kind of drop that in there. But you kind of see how these light blue but horizontal lines.
Where
I
do
mean,
you
that
anchor? Where
is,
are you supposed to anchor that at?
you can, because I don't trade it like exclusively, but kind of watch this. I don't have it on there now. And
Mm-hmm.
if I come up here and I click on one, and let's say I want to anchor it kind of at the opening price, you can see
Mhm.
how now that the market time frame horizontally, the
Mm,
market is the US market's closed. You know, here is where, even though I anchored it at the opening price, it
mhm.
adjusted down here as time progressed.
Yeah, that's where all the action was in that
Yeah, that's
spot.
where you can see this volume node comes clear over to here,
Yeah,
where we've
wow.
got other you know, the nodes themselves are so much shorter, but you can see that's where there's a lot more buyers and sellers at this price.
Mhm.
You know, volume is just up, it's high. We look at specific times. So here's like our volume as time progresses. Well,
Mhm.
it's actually going down all day long. But from a horizontal or price perspective, this price is where the maximum amount of transactions took place. And that's why this volume here is actually, you know, every bit is, if not more important than this down here, essentially.
Yeah, because it kind of bounces around the blue and then it shoots up to the green and bounces around there and then it shoots back down to the blue area.
Yeah. Yeah. And then notice how easily price kind of moves between
Mhm.
these volume nodes.
Mhm.
That's
I've watched
actually,
some people on YouTube and they kind of trade that way thinking it's gonna go through that to the next volume area.
and that's exactly right. I
Mhm.
mean, and when you're down, let's say, um, we're like, we've got all this volume up here, and we kind of have this liquidation. And again, Elliott wave one, this is three, two, threes in there, two's in there
Mhm.
somewhere. But one, two, and then our third volume node, right? We're on a different scale. This was number
Yeah.
three.
Yeah.
But okay, so now I've
No,
got Elliott wave to think about. It's like, hey, I've got three distinct lows.
Mhm.
You know, one,
Yep.
two, three distinct lows right here. Okay. And then I look back and it's like, oh my goodness, and I've got all this volume up here.
Mhm.
Okay, what is the probability that larger money institutions are going to go ahead and start buying up? Some bulls are going to start coming up because there's kind of a fair value price up here,
Mhm.
you know. So a good hammer, you know, this would kind of be your support. You kind of got some good liquidation going on, but
Yep.
just Elliott wave theory alone, and then you've
Mhm.
got a large, very large volume node back up here. That's two reasons to get out of the trade.
Mhm.
You know, so it's like
Yeah.
Elliott wave is very, very powerful. You know, look for
Mm.
those three distinct. You know, and again, it's that first part of the session. Once we hit those three distinct waves, we just kind of go sideways.
Yeah.
Um, but
when
here
it's
we're looking at
trending, pardon.
Here we look at, you know, kind of one, two, three, four, five. You know, you kind of
Mhm.
got it again from a micro perspective,
Yeah.
you know. I mean, it just repeats over and over. But if we start here and, you know, we're looking at one, two, three, four, you know, five. And
Mhm.
how low will this continue down? Will it create a distinct low or not? The idea that you've got this point of control, that's this red line. What this
Mm.
red line does, or point of control, it's just graphically representing your peak horizontal volume node. So that's
Mhm.
that anchored volume profile. So the red line is just letting you know visually real quick, hey, we're at exactly what price is my peak volume.
Mhm.
So
Yeah.
here you've got volume by time. Here you got volume by price.
Interesting. Yeah.
Yeah. So it's like there should always be, hey, what are the three reasons I'm getting in? You know, and your exit criteria should always be predetermined, you
Mhm.
know, based on your strategy. And that Elliott wave is absolutely a very good way. It's not necessarily, am I going to say, hey, I'm only exiting on Elliott wave? No. I'm exiting when I hit 2 Rs. If I'm doing that strategy, I'm exiting at 1.2 if I'm on a 3-minute time frame doing 10 EMA.
Mhm.
However, if Elliott wave theory comes in and I get that fifth leg or that third distinct lower high, then, and I haven't quite hit my target, then I'm looking at, okay, there is a reason to not have patience and hold through the target.
Mhm.
Elliott wave theory. Oh,
Yeah.
and I happen to be quite a bit below, a very good move below the maximum, the price, where that volume node is. So there's two distinct reasons. And then three, I'm like, okay, look how extended I am below my 10 right now. So it's like, why am I going to stay in here any longer?
Mhm. True. Yeah. Just
And again,
another
it goes back to the
indicator.
drawdown. How do we stop drawdown from increasing, those pullbacks? Well, if you didn't quite hit your R and you've got those three reasons to get out, minimize your drawdown. It's okay that you
Yeah.
didn't win 1.2 Rs. Hey, did you go ahead and take 0.6, 0.7, 0.8 off the table? Maybe it was 1.
Mhm.
That's getting more advanced. And still objective, because it's objective because you've got three reasons. And I say three because it's a trinity. There's power in three. There's witnesses there, and it gives you that historical data that you can collect, and you can start wiring your brain. It's like, okay, I got Elliott wave. I'm way extended below my 10, and I'm well below the max, the point of control.
Great.
And if you got the 1.2, great. Don't worry about, oh, I could have got more.
I know.
How quick are they going to snap right back up? And then next thing you know, you gave back.
Pigs get
Instead
slaughtered.
of taking that 1.2, and it's like, okay, if you were perfect, you could have got 1.8, or 2. The next thing you know, you got 0.5.
Mhm.
And then we want to get back in, at least get back to that 1.2. And then next thing you know, we've given back everything that we've
I know. So frustrating. Yeah.
Yeah. And
So
so,
much to learn. Yeah.
yeah, so I just can't stress the importance of, and your story, and Susan, I don't know if you caught it when we first come in, but the struggle that Rhonda kind of shared with quitting yesterday, down 5, but coming
Loser, accept it. You're a
Yeah,
loser.
if you remember when we all first met, it's like that's one reason we want to be able to stay in,
Mhm.
for that 1.2, because when you win and you win 1.2, well, it's okay if you lose 1, because
Yeah.
then at least you got a 0.2 net gain between two different trades. If
Mhm.
it's 3 trades a day, well, then it's at least that's on the average of, if you win 2 and lose 1, then it's even better,
Mhm.
because then you've won 2.4 and lost 1. And so then you're net 1.2. But if you got 2 trades and you win 1.2, and second trade you lose 1, well, hey, at least you're still green for the day.
Yeah. No kidding.
I followed your what'd you call it? OB, the one you taught last week? That
Yeah,
five
I really
minute
don't
OB.
have a good name for it, but it's a 5-minute, because I'm trading on the 5-minute candle, but it is the opening range. And then I go ahead and utilize the 50 simple moving average. So I call it the 5-minute ORB 50 SMA. And
Okay.
that's just
I've
because
won 6 out of the last 7 trades I've done with that.
Nice.
yeah, I mean,
Nice.
And it's one trade and I walk, and guess what? I'm enjoying life more.
Oh my gosh.
that is so awesome. That makes my
That
day.
is good. I'm gonna go back and watch that video. I haven't watched it because
And
I was not
350,
here.
if you get 350, add up 350 for a week and then times that times 4. That's 6,000 in
It adds
no,
up.
4,000.
Adds up.
4,000.
Yeah, it's
I gotta
Chunk,
I gotta
chunk
do my
change
math here.
there. Yeah.
yeah.
Yep.
And it shouldn't take a good strategy for us to grasp the power of having a strategy.
Hmm.
Because that's applicable if you're doing 10 EMA, doing hammers, doing indecision candles. It doesn't matter. Once you identify trend and you're consistent in your reason for getting in, you're consistent in your trade management, and consistent in your reason for getting out. Once you lose, like with the once you lose 2 Rs for a day, you should be done. Like with that 5-minute ORB, that's a one and done.
It's funny that you bring that up because I, over this past week, was watching somebody on YouTube with that strategy, but they didn't use the 50 EMA with that, or SMA.
Interesting.
So
I'd love to
I'll go
see
back and
who.
watch your,
Yeah, because the utilizing that, like that pre-market as defining the range for the ORB, that's new to me. I did come across this Garland Trader is kind of where I was like, wow, I just can't trade with them. I don't like their stops, and he doesn't even follow his own rules. I mean, one time he right in, and he got stopped out real quick. I'm like, dude, I says, I watched you and I completely respected the fact that you're saying watch that price action as it comes back to retest that range, and he didn't that one day, and I did, and that turned into a beautiful winner for me that day,
Yeah.
And then last Friday, I think it was, I'm like, it come back and retested. I'm in, and they didn't get in. And then by the time they finally did get in below they waited until they got below the 4-hour roadblock that they had on there. Well, I was about ready to hit my 2 Rs. And the fact that they were getting in there just give me another reason to stay in. I'm like, well, cool. If you're going to get in there, that means, and sure enough, I hit 2 Rs, but they're waiting to win their 2 Rs when I'm done.
So do you is that on the video from last week?
Yeah.
I haven't watched that yet. I'll watch it because I like that strategy because it's right away in the morning. It's good for me. I don't have to leave or do anything.
Oh yeah.
Yeah.
And then you're done.
And you're done.
Yeah,
Goodbye.
I think last week we that's where we kind of broke out that strategy. Wasn't that the only time I've done it?
Yeah.
Okay, I'll go watch that one.
My Tuesdays are running into each other, but
Because it was the 6 o'clock for me, 6 o'clock, you're 4 o'clock. Where Rhonda is.
Was it the
It was the late, it was the
later
challenge guys. Yeah.
The challenge group. Oh, okay, gotcha.
Yeah. So we didn't meet. Our group.
We didn't meet.
That's right.
Susan, Rhonda, Jake didn't meet.
Yeah.
Yet last week. I did
right.
that. So I think I chimed back to you, Ron. I said, hey, that's okay. Because I do have a new strategy or something. It'll be fun to join today. And that was where I knew I was going to lay this out because I'd done a lot back trading on it and kind of
go back
so
and
the
watch
rules
that.
are laid out on there.
Okay.
I'm refining a couple things that we did talk about at the beginning of the call with the 10 EMA and that 200, because I'm going now back and separating data. Hey, which days are better than other days?
Wow.
Am I interacting with that 200 simple moving average, when US market opens, and those things right there, I'm just like, you got to be kidding me. But just whenever like, here's the Aqua's 200, my 50 is below the 200 and the 10's below the 200. If I get in here and this is applicable to the 10 EMA, but as long as price is staying below the 10 and I'm stacked up, it's like, why even worry about it? When I have a loser on that 50 SMA ORB is when I haven't quite hit my 2R and now price is staying above the 10, even though my 10 might be below my 50 and below the 200, but it's like, hey, the writing is on the wall. It's like every single loser has this in common. I'm like, that might be valuable information to verify a little bit further. So
good.
But I got a couple of things I could show on that, but I'll just wait till
well, I veered you off I always do this. I'm sorry. I always veered you off your schedule today.
That's all right. Because then if you get to hear it twice, then it makes it better. And then this is your opportunity to kind of even ask more questions on that.
Yeah.
That is kind of the direction we're well, it's the direction we're going, but it stands on its own. And that's the way I presented it last week, is it's not a new shiny thing to chase. You can still do 10 EMA because it creates that daily bias. It's like, okay, I don't know damn, do I wait 1 hour? You know, do I wait for that previous day high or low? And those are all absolutely true when it comes just 10 EMA by itself. But all of a sudden, here is utilizing a different range, and it's like, good grief. When I retest that lower or that upper limit of that range, and that range is the subjective part. That's where, you know, I'm still trying to define, do I use that entire Globex range? Is it just maybe from 7:30 Eastern Standard Time or 8:30 Eastern Standard Time? And there's some variations there. But that's also where determines where my stop's going to be. So if we got a larger range, then got a larger stop. You know, it's a tighter range, then it's a better stop. So, but that's just where back trading, and I'll show how I'm collecting data on it and stuff this afternoon. But that's those are the things you got to look for, you know. But I'm finding a larger stop, and 2Rs is pretty easy to obtain on most days. I mean, look at Susan, you know, what, you said 7 out of, or 6 out of 7?
Yeah.
Nice. Wow.
Yeah.
Well, the
So
thing is, I started with it about 2 days before you taught it, and then I refined it because I did lose that first time. But it is really good. And then, like I said, if I can do 350 a day, thank you. I'm going away and I'm gonna do what I want to. And I don't want this stuff hanging over my head. Plus,
No
plus
kidding.
I
Well,
want to get it over with in the morning.
and
Yeah.
that's kind of the goal anyway, right? To have more time.
Isn't it? I mean, yesterday and today, well, even started it last week, but yesterday I took off to Fairbanks when I was done. I lost an hour. I was like, that sucks, but I'm like, I don't care. You know, today the conditions just never did set up. You know, here was my range. We never did retest it.
Yeah.
You know, so I just waited a little bit longer, got through this brick wall, and then I just had a good 10 EMA. And so I got in and just set it for 1.2. It's like, okay, I did get my 2R, but that wasn't the playbook today.
Yeah.
You know, so but I had my bias defined based on the range strategy. So I'm like, yeah, we're definitely bearish here for a little bit.
Do you set your 50 SMA to the 1 hour?
No, this is actually a true 50 SMA, so it would be tied to the 5-minute. So there's 55-minute candles that actually are determining this. Yeah. And that's a good point. That's something else. You know, I've kind of looked at, maybe I don't need the 50, maybe the VWAP, you know, and that actually works almost just as
It's
well.
really crazy when the stock comes back and taps on any one of these lines exactly, right? And then goes the other way.
Yeah.
It's crazy. You know?
It is. And actually you bring on a good point, because when it comes down to it, it really doesn't matter what moving average you use.
Yeah.
The key is be consistent with it. Hey, if you want to be above VWAP and you're only going to look for longs, hey, that works. If you want to be only below the 200 simple, hey, that works. You know, 50 works. Maybe it's 100 EMA. You know, what is your rule? The power in picking on one and kind of sticking with it, and utilize maybe another one as a additional information to give you that confidence, you know, that confluence. You know, in other words, how often am I going to be, this candle going to be below the 50? And the 50 above the 200, but we're going to go short when price is below the 50. That to me is not good.
Too many rules.
Does that make sense? You know,
a lot of rules.
Yeah. But again, it's just the idea that this is a lot slower moving average. So when your larger moving average should always be above, and so like 10, 50, 200. If they're not in that order, then you're in chop. It's sideways. Remember that fan we always talk about when we used to have all the 10, the 20, the 50, the 100? Well, you want them all spread out. And when they start spreading out and going a certain direction, hey, then you have trend. Same thing here.
Yeah.
You know, but I'm just looking back, capturing. So now I'm just starting to ask myself, okay, what is consistent with losers, what's consistent with winners, and really picking apart every trade every day and just refining the strategy that way. And that's I've heard that, I've known that for the longest time, but and I've got so many different spreadsheets where I've started that. That's the challenge, but I'm utilizing Notion now, which is a different type of information management. It's just so much easier than even Excel.
Oh,
And so that way I can now have multi-select, I can do yes or no, and then start having all these different parameters, and then I can filter it, and then I'll clean it up later once I realize, okay, yeah, tracking this on this particular strategy is a waste of time. Tracking this is a waste of time. But days of the week that it's more effective, I'm finding that's pretty valuable. You know, hey,
wow.
did I interact with the 200? Like right here is so close, but this right here is what I'm talking about. I can't price just, and again, when you look at Globex, but this interaction with the 200 right here is so important. If we were like down here,
Mhm.
then how many times you can expect maybe a little bearish flush, then it's going to come back up and interact with the 200, then it gets rejected. But if we have that interaction at the beginning, then I
Yeah.
kind of let it go. That's what I mean by the gap with the 200. It's just so many times. Now, if we happen to have interaction up here like we do, and then price even through Globex just kind of starts going down. Now, a lot of those really good trades, they do not interact with the 200 after the US market opens, but they have a good clean start during that pre-market and they just continue trending. That I see. That's
I can't figure out why your orange one dips down like mine doesn't dip down.
this one right here, the 50.
Yeah.
Do
the
you have
50.
an hour on it,
No.
Jake?
Yeah.
No,
Oh,
not
I have
on
an
this
hour on it. Do you, Jake?
No, 5
The
minute,
time
but then that bottom
I've
number's an
got
hour.
the
you've got chart.
No,
chart.
you got chart.
Yeah.
Mm.
Yeah. If I was to go make
Oh,
that
yeah, now
60
Mine
mine's
has
minute,
hour on it. Yeah, mine has hour on it.
Yeah.
yeah, that's what
That's
Calvin
why.
Williams, 10 EMA, that would be your 50 simple
Yeah.
moving average up here. So see how the 200 and the 50 kind of provide that similar thing when this is what's happening on the hourly time frame. So yeah, bearish conditions are met. Beautiful. It's serving the exact same purpose.
Does it matter if it says chart or hour?
It's just
Yeah.
going to give you a
Oh,
different.
I know. Which
that
should we go with?
For this strategy here, I am going 50 simple moving average, and that's
with chart.
With chart?
with chart. In other words, it's tied to the last 50 candles of whatever time frame I'm on. I happen to be on 5, so the last 50 candles is what's determining the average when I have it tied to chart.
Mm-hmm. And that's for the 50 for the 10.
See how it dips down there, Rhonda?
Yeah, the 10 EMA.
Yeah, everything you're looking at here is tied to chart. That setup with the 10 EMA, when I have that template and I'm just solely doing 10 EMA, then my template does have it tied to the 1 hour. And again, that's really good. But I'll probably, again, I like consistency. So if I've got different templates up and I see one orange, hey, if this is my primary means to determine my bias for the day and I'm executing a strategy based off of it, I'll probably do away with that 1 hour.
Mm-hmm.
Because again, is it really telling me a lot different than what my 200's telling me on a
Right.
smaller time frame? Yeah, and it's real important to understand that, hey, you don't have to, we all don't have to have the exact same
Right.
moving
Right.
averages. What's important is that you're consistent. When you're looking at your chart, your indicators, you know what you're looking at. And you're
Mhm.
like, you know what? I'm on the 50 simple moving average tied to my chart. Price is now above the 50. I will not look for going short, period. It's just a
Mhm.
rule. But you could go short anywhere in here based
Right.
on the 50 SMA until here.
Yep.
And you're really not in a bad shape, because if you were to go short anywhere here,
Mhm.
and you're and again, this is kind of like a valid pivot point. You're by the time you come back above the 50, you're not where you should not be near your stop yet. So it's one of those three reasons. Hey, I'm wrong. I'm going to get out here. I'm not going to take the full loss. Oh, I'm above my 10 also. And now I'm going back above my 50. Why am I staying short?
Mm-hmm.
You know, so it's like we don't want to be so objective that, hey, I'm not going to get out because I didn't hit my 2R target. And that's where I'm going back every trade. It's like, hey, what are the conditions on the losers? You know, what are the conditions here and there? And this is a perfect one. Like right here, we're back above the 10. If I didn't hit my target here, you know, that's a reason to start considering getting out. It comes back, retest this low, but it's a higher low. Even this is a little bit higher than this over here. If I'm still in over here, definitely getting out at that point. Once this candle comes in here.
Yep.
Now I'm back
Hey.
above the 10 again a third time. I'm like, no, it's just there's too much support through here.
There was a kid I heard, listened to on YouTube, and he does not ever trade Mondays. Obviously, he's lost a lot of Mondays. So
Right.
he just doesn't open up the charts.
He likes Taco Tuesday.
Yeah.
You know, it's fascinating. I'm going to show that this afternoon, but just this particular strategy alone, very interesting that Monday, again, when you still look at a 58% win rate, you know, it's like, well, it actually, if that was the only thing you did, you're winning 58% of the time. It's not bad, you know, but it definitely different than the rest of the days. I think it's like Wednesdays and Thursdays. I've got one of them on there. It's like 10 out of 12, you know.
When you figure your win rate, do you figure per day or do you figure per trade as a whole?
I take out of the equation all my break even days,
Okay.
and if it's a no fill day. So win rate is solely determined on
The end of the day.
the end of the trade. You know, if it's a break even, meaning once I have unrealized of 1R and I move my stop to break even, if it comes back and stops me out of break even, that does not go to my win rate. Because then you'd have, you know, maybe 20% of your trades that are zero.
Right.
When you didn't lose anything, you know, so, and is that falsifying data? It might be, but I don't care if I'm still validating, hey, of the trades that are a winner or a loser,
Right.
if I'm winning 73% of the time, and then I've got objective rules to break even to where I'm not going to lose, I'm not going to put those in my win rate. I might only have maybe 4 days out of the week, some weeks 3, where I've got trades to count for, and it's not going to be, you know, in 10 days, there may not be 10 trades. In 10 days, there might be 7 trades. But if of those 7 trades, if that's a 70+% win rate, that is where Susan's going, hey, good grief, that adds up over time.
Yeah. Yeah, for sure.
You know, and another reason I'm going to cover that this afternoon because I want to go over that risk spreadsheet and why I do it that way. And then you can gain so much confidence in your strategy when you are actually tracking your win rate and lose rate. That's where you put it in, walk away, and then based on your rules, move your stops. Because then when you start, the larger and more days of information, the larger your sample is, the more accurate your data is going to be.
You use a certain program for that or just Excel?
Well, that's where I'm using Notion now, but Notion is nothing more than you got like Microsoft Access, you've got Excel. It's a spreadsheet, it's a database, but it just allows me to change all the different fields so much easier than Excel. I'll show that a little bit. Where I got that from is push button trading. Is Tracy Ball, that's just another thing she's adding value to the community and teaching that. And she's even created a template specifically for trading, but it's so much bigger. So I just went to Notion and got a free version of it and messed around with it this past week. But that's another reason where again, I do encourage the push button trading for you guys' continued education.
Are you gonna talk about that in the next session?
Yeah, we'll hit that. We'll hit that next Tuesday.
Okay.
Next Tuesday, because I think even we're going to talk about it this week a little bit, but we kind of talked about a lot of this right now, which is good and fine. But I'll hit that there, and then I can even drop in the website here into our WhatsApp. But that's my go-to for all my continuing education with trading, because it's so much more than just a strategy, and there's no live trading, but it's like, hey, there's little different tools. Ninja Trader, there's a dashboard they're getting ready to roll out, so your drawdown on your dashboard is right there. It's a copy trader. It's integratable right there, so you don't have to go pay another 150 for Apex to have the Apex copy trader in there as a premium member within Push Button. That you just, anytime they roll out something new, it's you've already got it. You don't pay for it.
And is that the robots trading?
That's that bot trading. There's three specific tracks in there. One, there's three different mentorships. Let's just I'll call it that way, which each mentorship is a specific track that they have. And one with Tracy Ball is utilizing the semi-automated technology, but it's a push. It's where you say, here's my strategy. You've already predetermined your take profit and your risk, and then it kind of calculates it for you. So you just click on your screen and say, I want to enter here. And then of course she's got then specific strategies she teaches, like hammer and just very foundational support and resistance. She really talks about psychology and risk. She, to me, is the best in the world. I mean, when she puts out a new class, I dial in. I just got all the respect for her in the world. Absolutely.
Tracy Ball or Bell?
Ball, Ball. Yeah, I really, really like her. Then Matt DeLong, his focus is the fully automated bots.
Right.
So you're just going to go through his training. It's each one of these are 12-month mentorships, by the way, formal block instruction once a month. And then there's the push button communities. People are sharing their trades, questions, Q&A, and then all the other classes. There's new classes popping up throughout the week. They're all recorded. You listen to them on your own time.
Wow.
But your formal mentorship, is just once a month. And like with the bots, it's once a month, and you get a bot in the very first session. And then there's all the historical videos in there to learn how to optimize it, do it. But that's where you just have one account over here and just let the bot do its thing. And then you're trading in your other accounts over here. Then if you're interested in options, then they've got semi and fully automated integration technology to trade options. And then Robert, RT3, he's a SME when it comes to options. So I always kind of have you in the back of my mind as like, I think Rhonda's going to probably end up doing a push button someday. And she might migrate right into the options space, and I'm actually going to take his class. I think it starts in December or November. I'm going to take it.
I really liked options a lot.
Yeah. But to kind of utilize it with the bots and this and that, what it makes his unique from the other two is with the options, you do need to have your own broker, to be able to trade options, where with the actual bots that Matt teaches and then the strategies that Tracy teaches, you can definitely use your own broker, and Ninja Trader 8 integrates with these other brokers. However, they also work with all the prop firms that we're trading with.
Well, I was going to ask you that. Yeah.
Options, no prop firm that I'm aware of at this point. Yes, with the bots. Yes, with push button trading itself.
Well, I've seen videos of Jeremy Newsom where he's trading the 10 EMA and he's got options on there as well, because when it's just ranging, man, that's when you do a credit spread, right?
And he does a lot of options. And 10 EMA is a lot of times still his premise, for the day trading of the options a lot of times. And then his swing trading, he has a lot of options also. So he's definitely into a lot of options. And again, that's how you hedge your swing trades and your investments. So he owns a lot of different US equities, and then he's continually utilizing the options to hedge. In other words, if he's long in Tesla, well, he's continually buying and selling puts and calls and
I
making
know.
money, even though Tesla's going the opposite direction. 'Cause
I
it
know
has
it's
quite well.
crazy. I would walk away and go, I don't know why anybody, because I only sold options. I never bought. And when you sell them, you get paid right away. And I'm like,
Get a premium, yeah.
I don't know why somebody just bought that from me, because it's not gonna benefit them. I'll just
Some
keep
idiot.
$800. It's fine.
If I got an options, I'd be the idiot buying it from you.
Oh, come on.
So, but those are
So,
the three different mentorships in there, and it's 150 a month. And
oh,
then, but within that is that full mentorship of whichever course you choose, and it's just one mentorship, but then,
yeah,
next year, then you do a second one, or it costs more if you want to do more than one at a time. But
right.
I'm like, why would you want to do more than one at a time?
Yeah, one bite at a time, right?
Yeah. Like
Yeah.
right now, I'm comfortable with, and I actually manual trade still is my money maker more so than the bots. The bots just took off for me. I got in at the right time, funded 150K account, but they've kind of been flat since then.
Oh, really? Huh.
Yeah, yeah.
Wow.
Well,
Yeah.
you said they're sporadic sometimes.
Yeah, yeah. I mean, over time they're excellent, and that's the beauty of it, But like when we get into like a strategy like this, and it's like, hey, if I've got, so I do have another 150K account with a $7,500 drawdown, so my risk is actually 750. So every time I win 2R, it's 1,500. Every time I lose 750. Well, with the bots, it's just. I have to have a much smaller R, again, spreadsheet driven, statistically, probability wise. Each bot stands on its own, but I might have 5 or 6 losses in a row with a bot.
Oh,
Where, because other words, and even though the win rate is still optimized and says no, it's actually better than that, but it's that many trades over that many times where that win, because bots, if you didn't have a drawdown, freaking be awesome. Yeah, I mean,
yeah.
you just they just
Right.
win over time, but
Yeah.
it's the drawdown where
It's
you
that.
really have to come in and understand that risk, and
Yeah.
a much smaller risk with a bot than I do manually trading.
Mm.
That's because as humans, we still have an ability to go in and really, hey, my 200, my 50, my 10,
Right.
hey, Elliott wave, hey, that opening range, so.
Yeah.
So they're just, that's where I'm at. Some people could argue that, and I don't want to be talking negative about the bots, but absolutely, when you just have a couple bots, you're optimizing and it accounts by themselves and just let them go.
Wow.
Yeah, I mean, you're scaling your business. You're scaling your business, and
Yeah.
so
Well, it's
maybe more
exciting. I feel
vacation.
like I'm one step forward all the time, maybe 2 steps
Nice.
back, but I'm always coming. I'm in a little bit up the hill.
I tell you what, if you can really, and this is for myself included and Susan, accept that full R loss and then say, you know what? Okay, I'm done for today, because
Yeah.
I win more over time by following this plan. And I know it's just a business expense when
I
we
know
lose.
it's.
We have to look at it's just a business expense. So you don't have to get it back that day.
I
It's
know.
like, hey, it's the cost of having a business is I've got to pay my employees. I've got
Yeah.
to pay the market, because the market actually is working for me when I follow my business plan.
Yeah.
And I have to pay the market. It wants some, so it's a business expense. But when we
More
can say,
times
okay,
Vegas.
it didn't work
Yeah.
today, but I know I have a good win rate. I'll be back tomorrow.
More times than not, if I try to recover it, I lose bigger, right?
That's where it is. Yep.
Than if I would have just stopped. So it's
Sometimes if I if I lost in the morning, I'd come back in after lunch and then you might have a better shot at
yeah,
it.
yeah.
But get the adrenaline out of you.
I know, the dopamine.
Yeah.
Get the trading. It's almost like it becomes a gambling drug, right? At
Well,
that
it
point.
is.
Yeah, it is. Yeah.
Hello, my name is Rhonda and I day trade.
I have a problem.
I have a gambling problem.
Yeah.
It's
No,
fun.
because that's all real. That's all real. And
It
It
is.
is.
where I know I'm at, and I really want to, and at least I think my goal, my passion right now is to show data collection, define rules, why it's important. But it's like, if you really do follow your business model, you can generate positive cash flow with your business over time. And you don't have to have 4, 5, 6 years of trading experience.
Right.
It's like, Susan, you got me excited just, tasting a little bit of, it's like, hey, here's all I'm doing right now, and I'm done a little bit early, and your win rate is consistent with what I'm seeing also.
That's fantastic.
We're talking less than a year to be able to have at least a sample of what's possible.
Yeah.
Right.
Yeah.
And I can't sit still. This sitting in front of the computers drive me bat crazy.
Yeah.
I've never sat in my life. And this is,
You'd rather go out with the hay and feed the animals, wouldn't
or
you?
the kitchen, one or the other, but not a computer.
Yeah.
It's like me,
I
I'm
spend
excited
enough
to go,
time
and
in
I'm
the
gonna
computer.
cut me a slice in a tree, and I'm gonna say it's gonna fall between that and that. I'm gonna hit my target, and I'm gonna make me a little slice, and it's about a 60-foot tree. It's coming down here in about
Woo,
20
that's
minutes.
big.
But I'd rather go do that than sit here and trade all the time.
Yeah. Well, I get enough computer time, so I'm like, blah, pretty soon. Yeah.
Yeah. All right.
Good stuff.
We'll drop here. I will drop in the push button site in there. Check that out if you like.
Okay.
And then I'll drop
And
that
there
in.
is-
We're gonna hit the strategy this afternoon. Some of the stuff we talked about, I'll repeat, but I will bring up my spreadsheet. But I'll tie in that risk spreadsheet, how I'm tracking the data, why that's important. And then I think I had a couple folks still saying they still don't really understand that entry price or that entry criteria. So I'm going to try to really define that. There was like these white lines up here. I mean, that's entry criteria defined before the US market actually even opens. So then you got a minimum of 10 minutes before you even ever should, according to rules, ever enter a trade, because you'll never trade off of the first 5-minute candle. And then 2, the second 5-minute candle must close above or below the second or later. So you got 10 minutes before you're ever even have to do the math. It's like, well, how many contracts do I want based on where my stop's going to be? Well, you got 10 minutes to do some math.
Right.
That's another positive thing. So
Are we doing an hour later?
Right. Yeah, I guess we're 1 hour out from that start
1
time.
hour
So
out.
that'll be
Okay.
4:15 Pacific, 5:15 Mountain, 6:15 Central.
Okay.
And that covers things. So we'll drop here. I'll get this recorded and dropped into our group, and I'll see you guys in about an hour.
See you then.
I will see you next week. I'm going to watch the recording in the morning.
All right. Sounds good, Susan. That is fair. All right.
Bye, Susan.
Bye, Rhonda.
Bye.